Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We gotta add a little addendum to the show map today, and shall we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the Vietnam War. The government has been getting bigger. Check, check. Check, 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 check. Can you guys hear me now? Literally nothing's muted. This is very strange. All of my properties are exactly the same way that they always are. That's so odd. You can hear me now. That's so, look. Literally all I did. Man. Watch. This is our back end. I just want to show you what happened here. This is our back end. You see this little level right here? This has been going the whole time. That's how we do a mic check. I run diagnostics on the stream every time before we start. Literally all I did was go in here to properties and like turn it off and turn it back on again. That makes no sense. Okay, I don't feel too bad about that because there was literally no way I could have seen that coming. Let's take it from the top, shall we? Hey guys, what's going on? Jeb here, and in today's video, we are going to be talking about the massive uptrend that is forming right now on Bitcoin. We are going to be analyzing the difference between two major levels of support, the logarithmic uptrend that has been supporting this bull market thus far, and the linear chart uptrend that has also been supporting this bull market thus far. If we look at our chart, we're going to start by seeing that on October the 6th, Bitcoin rallied up to this uptrending level of resistance, which has been holding the Bitcoin market down for the last 5 years. And we managed to end up rejecting off of that level. And so we have been trying to decide ever since that point in time, where is Bitcoin's bottom going to be? And there have been two primary theories. Number one, Bitcoin would drop down to this logarithmic uptrending level of support, which is exactly what we did when we sold off. We dropped all the way down here. As you can see right there, to this logarithmic uptrending level of support. In fact, on most exchanges, we wicked exactly to that level. There were a great number of whale buy orders down at that level. And then, of course, there is also the other prediction that we've been talking about more so on the channel, which is a drop down to the linear chart uptrending level of support, which looks a little bit more like this. And this gives us support at 94,000. I am becoming increasingly confident that Bitcoin may have just bottomed off of the logarithmic uptrend. And if it did, that means that Bitcoin is most likely about to go through a logarithmic movement to the upside rather than a linear movement to the upside. We've been predicting this entire time that Bitcoin was going to sustain a linear movement to the upside. Do you see the difference here? A linear movement to the upside would look like this, and it would be a much more healthy kind of staircase to the upside. If we, in fact, do not see Bitcoin backtest down to this uptrend, and Bitcoin did just bottom at 103, then that most likely means that because our volatility has decreased so much, I mean, we have basically been trading sideways for the last 7 months. There's virtually no volatility whatsoever. Pulling up our Bollinger Bands, you're going to see that. Volatility has just dropped off a cliff on the weekly chart here. See how tight the volatility is here. If that's the case, then most likely what we're about to see happen is a major pump straight through this uptrending level of resistance. And we've seen that happen before. We saw that happen on gold. If you go over to gold spot price, we saw the exact same pattern. Double top and everything. Double top over here, long-term cup and handle form, and then break bullish. Bitcoin has done the exact same thing. And so I'm very excited to share with you that Bitcoin may be about to see its heyday for a multitude of reasons that we're going to be breaking down in this video. I do apologize for the technical difficulties. We got a lot to cover, so we're not going to waste any more time. If you enjoyed today's video, make sure to hit that like button, subscribe to the channel, hit that post notification bell so you don't miss a single stream. We go live at 10 a.m. Eastern every single day here, right here on the #1 technical analysis channel on YouTube for Bitcoin and cryptocurrency markets. So let's go over what we're going to talk about today. Number one, we're going to talk about where we've been. What has led us to this point? What are some of the key pieces of data that we can extract and analyze from the month of October? Because the month of October is almost over, and so far it's looking like we actually might see just a small little gain if Bitcoin is able to continue rallying here. Number two, I want to look at what's going to happen in the next couple of days. We're going to be seeing an FOMC meeting. We're going to be seeing a rate cut this week. Are we going to see a crash off of that? If we do, what kind of patterns might we see? And three, we're going to be looking at the long term to see where Bitcoin is going. I have been a very vocal, outspoken believer in two different theories. Number one, Bitcoin would drop back down to between $94,000 and $100,000. We got close. We dropped down to 103. Didn't quite hit down there because it looks like Bitcoin possibly is about to bounce off this log uptrend. And number two, we're also going to be talking about and also, we've talked about how I believe that Bitcoin is not about to go into a 4-year halving cycle bear market. And I do not believe that October the 6th was the bull market cycle top. And so we're going to be breaking down all of that today. So let's get started. Shout out to everybody who's in chat. Queen is here. BM718 is in chat. Keep a volume equalizer open when you're streaming, man. I do. It's right there. It's right. I have a whole monitor just for that. Like, it's showing me the waveform. Queen's in chat. Lewis Richards in chat. Micah Mann's in chat. Grant Terry. Michael Collins, Christopher Ryans. Yeah, really appreciate all of you guys for being here. Verizon commercial. Can you hear me now? All right, let's get started. Let's talk about what the month of October has looked like. We're gonna breeze through this, just because you guys have already seen a little bit of this, but it's important, especially going into a new week, that we have a perspective on the market. Now, if you'll recall, we set up this trading plan yesterday, not yesterday, on I think it was Friday, it might have been Thursday, and we talked about an entry right here because of the something called a 3-5A trading breakout that we were watching. We began watching this pattern right back in this area. And what I'm going to do, just kind of take a mental screenshot of this. I'm going to go ahead and recreate it on another chart just so that you can see very clearly what we are doing here. We're going to be using a couple of different pieces of technical analysis today. Namely, we're going to be using a Fibonacci retracements and Elliott wave. So by the end of this stream, you're going to have a much better understanding of what Elliott waves are, Fibonacci retracements are, and how we can use them to have predictive power to give us an idea of when markets are going to reverse. Big shout out to Rocket Race in chat and everyone else who is here. So basically what we've seen so far is Bitcoin went through what is known as a 1, 2, 3, 4, 5 Elliott wave movement. And the way that we can define that this is a 1, 2, 3, 4, 5 Elliott impulse wave movement is because we have a 1 wave, then we have a 2 wave, and then the first rule comes into play. The top of the 2 wave does not go below the bottom of the 1 wave. So that is our first check. There are 3 things we have to check for to make sure this is an Elliott wave movement, and it was. The second thing we have to check for is that the 3 wave is not the smallest. The 1 wave was substantially smaller than the 3 wave, so that's a check. Third thing we need to check for is that the top of the 4 wave cannot go below the top of the 1 wave. In this case, this is a short, so that would be above the top of the 1 wave. These two cannot cross each other. For example, we couldn't see the 4 wave come up here and do this. That would not be Elliott wave. We could see 4 come and touch 1, but it can't go above 1. So that is also a check. So we can concretely define this as a 1, 2, 3, 4, 5 Elliott impulse wave movement. And if it is a complete 1, 2, 3, 4, 5 movement, then according to Elliott wave theory, we would be expecting an ABC bounce off of it. And if the C wave continues, it might actually turn into a new 1, 2, 3, 4, 5 Elliott impulse wave, which is what we're going to be talking about today. This will bridge where we've been to where we are going. Cool. Now, what we end up doing here is we measure our A wave, and when we see the correction, we start saying to ourselves, where should the correction be? Well, typically what you're going to do is you're going to pull a Fibonacci retracement off of your A wave, and then you're going to look for the market to fall back down to the 0.618 Fibonacci level, which is exactly what happened. So the A wave is perfect. This is a perfect A wave. This is a perfect B wave. If you have a perfect 1, 2, 3, 4, 5, you have a perfect A and B wave, then what you end up seeing happen here, sorry about that, what you end up seeing happen here, don't worry, I don't ever do anything that would warrant you having to look through my history. You're welcome to. There's nothing there. People are always going to try and get me on that whenever I hit that button. Let's see. When you have a correction here on the B wave down to the 0.618, then you're typically going to see a bounce off of that, and that's going to give you confidence that the ABC wave is forming, which allows for you to trade the C wave, which is why we said that in conjunction with an over-under test, which is something that we saw right here. Let's go ahead and draw this trend line. In conjunction with the over-under test, which we saw right here, when Bitcoin bounced up here, hit the 0.236, which indicated that we were probably going to break above the top of the A wave at 114. We see a back test down here to the 0.382 at $110,000, and this is where we said it would be a good idea to go into a long trade. And so that is why we put a long trade opening right here. Now, unfortunately, I caught this like an hour or two after we went into it, and by the time I caught it, it was too late to get a good entry. So we didn't actually end up taking this trade, but we were able to see it in just like an hour, just a couple of hours of hindsight. And you would want to have pulled the stop loss right down here below this bottom. So you pull the stop loss right here. And then you would want to find the price target on this movement, which is part of the way that we were able to predict that we were going to come up here over the weekend. Typically, when you pull a price target, there's about 3 different ways you're going to do it. Number one, you're going to look for a price target on the C wave to be somewhere between the 1 and the 4 wave, so in this zone right in here. The second way you might do it is by pulling a Fibonacci retracement off of the overall movement, and then looking for a price target here at 0.618. And then the other way that you could end up finding a price target is by coming here to something called a trend-based fib extension, which is going to be right here. And we're going to go and pull a fib extension just like this. And then your Fibonacci extension is going to give you a price target up here at 1.618. So those are all the different price targets, hence the reason that we ended up on this chart over here. As you can see, they are basically the exact same chart. We ended up putting a price target right here just below the 4 wave in a conservative fashion. You can see right there, giving us that roughly, you know, pretty solid risk to reward ratio up towards 5. And so this trade would have actually populated. So if we had caught this in time, it would have actually ended up working out, because Elliott waves, in my experience, and I've watched them for a long time, do actually end up having a lot of predictive power. Now, if you'll remember, to like a month ago, when we predicted a drop down to $94,000 to $100,000, we were very careful to state that there is a place where that theory would be broken, and that is really the present. This is what has happened. Now we're going to move into the second section of today's stream, which is what's going on right now and over the next couple of days. What's going on right now is that Bitcoin over the weekend rallied up to a very critical level of resistance and rejected off of it. When you phrase it like that, it doesn't necessarily sound as bullish. Okay? It doesn't necessarily sound as bullish, because what you end up expecting is that maybe, just maybe, let's go on to another clean chart. Man, we're just always having to, you know, come up with new charts, right? Maybe, just maybe, Bitcoin is going to have to form an inverse head and shoulders pattern here. Maybe we drop down here and we reject off of 116. Why? Well, a couple reasons. Number one, this movement happened over the weekend, leaving a giant gaping maw of a CME futures gap right here down to 111. And so with that CME futures gap, it's going to most likely get filled at some point. Now, people argue about CME futures gaps and why they are, and whether or not they're self-fulfilling prophecies. I'm here to tell you the truth. You can find a CME futures, you can find a gap on any chart. This is not just a concept with CME. I'm going to tell you why. When you see, and I'll give you an example on a regular Bitcoin chart. When you see a market move through a range very quickly, let me find a really good example. When you see a market move through a range very quickly, such as this movement right here, you end up leaving a gap. No, it's not a CME futures gap. It's something called a fair value gap. It's an FVG, and they're very, very, very important in trading. When you see a fair value gap, basically this is what's happened. You have 3, or in this case 4 candles where you see a swing high on a wick, and then you see a big, just giant candle, and then you'll see a swing low on another wick. And the price moves straight through here. What ends up happening in this case is that a great number of buy orders do not get filled. And so most of the market participants end up leaving all of their volume down here in buy orders, down around 109 that didn't get filled, either because they weren't looking at the chart, because they want to end up purchasing at those lower levels, whatever it may be. The market, in a sense, builds a lot of buy volume, a lot of buying market structure down in this range, and oftentimes the market will fall over to fill this. Once again, it's called a fair value gap. Another example of a fair value gap, and this is actually a textbook example of a fair value gap. This one's a little bit different because of that red candle. This is a textbook example of a fair value gap, is right here. See this? You have an upper wick, candle body shoots straight through the middle, lower wick. This right here is called a gap. And so what you would do on your chart when you are doing advanced technical analysis is you would draw a box right here, and you would say, I anticipate that the market is going to fill this area. Once again, this is not a self-fulfilling prophecy as people talk about with CME futures gaps. It is a genuine force in the market because a lot of buy orders got left down here, and that is liquidity that otherwise is not going to be used to buy the market up here to continue the market moving. Now, obviously, they're not always going to get filled. Nothing in technical analysis always happens, but generally speaking, when you see these gaps, they do get filled. For example, here's a short fair value gap. They're all over the place. Lux Algo even has a technical indicator to kind of explain them. This is a bearish fair value gap that the market ended up rallying into and filling. You see? And so when you see these gaps, even on a regular price action chart, they're generally speaking going to get filled. And so this is why you're seeing the dump right now, and this is why we put our take profit where we did on that trade setup. You see that? This is why literally, this is the, just so you know, this right here, this trade setup, this chart was drawn 4 days ago. I did not draw this. This is the one I just drew for you now. This chart was drawn live on stream. We have a screenshot of it over on YouTube, over on Twitter. This is the exact target that we put here. I did not put this here this morning. This is the level, $115,800 that we put yesterday. And the reason for that was because we anticipated great rejection at 116 for a multitude of reasons, and we expected to fall over. And now I'm expecting the exact same thing. I'm not expecting for Bitcoin to just break straight through 116. I'm expecting Bitcoin to come back down here and fill some of these gaps, not only because of the CME futures gap, but because you also have these fair value gaps that I'm talking about here on the market. You've got one of them right there. You've got one of them right here. You've got one of them right, and this is not as obvious of an example one, but you got a little tiny one right there. These gaps are most likely going to get filled. Now, what happens if they don't? What happens if Bitcoin drops back down here? And we just take, let's go to a clean chart here. What happens if Bitcoin just takes a retracement down to a fib level, such as 0.236 here at 114 and bounces? If that happens, if Bitcoin manages to hold this uptrend right here and breaks through 116, I am 100% hands down calling for all-time high within 1 month. Wow, Jeb, that was really big. No, I'm serious. If Bitcoin manages to hold this uptrend on the hour chart, break straight through 116 without filling the CME futures gap, we are going to most likely rally back to all-time high within a month. That's what's probably going to happen. Because so far, all of this, and this is where we have to zoom out and do a lot of multi-time frame analysis when we're trying to figure out what Bitcoin is doing. If you zoom out, it gets really interesting because the daily chart has a 1, 2, 3, 4, 5 pattern. And this is where we got to bring in our longer term. The entire market has been in a 1, 2, 3, 4, 5 pattern. The whole market. You have your 1 wave, you have your 2 wave that does not go below the bottom of 1. 4 does not go below the top of 1. It touched the top of 1. This is a back test, right? But this works. This is fair. You have the and then you also have the 3 wave that is longer than it is not the shortest movement. This is the shortest movement here, right? And so you also have a complex corrective wave and a simple corrective wave would be the technical terms for these type of corrective waves. So this is 100% Elliott wave, right? Now, the interesting thing is trying to figure out where the top of the 5 wave is. You could have put it right here, you could have put it right here, but right now it looks like it's right there. Sometimes you have to adjust these things on the fly a little bit. But generally speaking, if this is a 1, 2, 3, 4, 5 pattern, there is a possibility that we're establishing an ABC right now. And this is where our theory about Bitcoin could go back down to 94 to 100K is possible. If Bitcoin rejects hard here from 116 and breaks down below 103, that is where we would probably see a major back test of $100,000, because we have this channel right here, right? See how I did that? We're going to come over here. We're going to grab our, here we go. We're going to grab our line tool. I've also got it down here on my toolbox, on my toolbar, right? Drag from these highs, this trend line. We're going to pull it down, and then we're going to forward and backward extrapolate it. You can see this is the actual technical definition of the entire market. As you can see, Bitcoin is at the 50% level right there. If Bitcoin doesn't, this is why we put our stop loss here, by the way, because of the multi-time frame analysis that we've done. If Bitcoin does stop here and does not manage to break through this level, then you will probably fall back over. If we do manage to break through this level, it's ATH. So this is where we're going to go ahead and draw a chart. We're going to make a prediction. We're going to put it on X, and you guys can repost it whether I'm right or wrong. You can mock me if I'm wrong. You can say, man, Jeb was right if I'm right. Let's go ahead and do this. If, see if I can't get the text to be a little bit smaller here. If BTC holds above 116K, 116 to 118K, then new ATH within 30 days. If Bitcoin does not hold, just proper grammar as much as we can, right? If Bitcoin does not hold above 116 to 118K, then no new ATH within 30 days. This is the current state of the market. This is everything that we can boil down out of this market. This is it. This is the single most simple way that I can break down this market for you. It really is that simple. The only thing I can add here is the Ray uptrend. That's all I can really add. And I'm going to, just for the sake of trying to make these charts clear, because something I'm learning as a chartist is it's very important that you actually publish your charts so that you can look back on them and see if you were right, see if you were wrong. So, this is our analysis right now. Well, Jeb, you're not making a prediction. You're just saying if we do this, then that. If we're doing this, then that. Hey, guess what? The computer that you are on is built on something called Boolean statements. Have you ever heard of a Boolean? Boolean? Have you ever heard of a Boolean statement? Here's what a Boolean statement is. A Boolean statement is a declaration that evaluates either true or false. And it is one of many different statements in programming, such as the if-then statement, that run your computer. I love that word, Boolean statements. If-then statements, for example. An if-then statement, more commonly referred to as an if statement or an if-else statement in programming, is a fundamental control flow structure that allows a program to make decisions and execute different blocks of code based on whether a specific condition is true or false. You need to operate without emotions. What doesn't have emotions? Computers! How do they operate? On if-then statements. If this happens, then I do this. If that happens, then I do this. If I press the power button on my computer will turn on. If I come over here and I press this button, who knows what it'll do? There we go. That's the sound of our technical analysis, right? If I press that button, it makes that noise. Let's see what does this one do. If I press this, yeah, that's you guys right now as I'm trying to explain, deep technical analysis. The point is, this is how you analyze anything. This is how computers work. You've got to have an if-then statement. If Bitcoin holds above 116 to 118, then a new all-time high will most likely happen within 30 days. If Bitcoin does not hold above 116 to 118, then we're most likely not going to see a new all-time high within 30 days. And here's part of the reason why I'm a little bit skeptical and I really want to see Bitcoin prove itself. Just take a minute to show me how much time Bitcoin has spent below 116 and how much time Bitcoin has spent above 116. You may not have seen this on other channels, but we have been talking about for a very long time the importance of $116,000. This is the level level that we managed to run up to here. This is the level we hit here, level here, the entire support structure back here, the entire support structure back here. We will eventually get above 116, but right now, the fundamental driver of the Bitcoin market is not $100,000. It is $116,000 as proven categorically by this chart. It's an absolute fact. There's honestly no debate about that. 116 is the level that we are looking at. So we're going to go ahead, for the sake of accountability, we're going to stick this puppy on Twitter, and we're going to go ahead and put that out there because that's what we do. We publish our charts, whether we're right or wrong. You can go look through my X and see what happened. If BTC holds above 116K to 118K, because we got to give it a little bit of room. I mean, we can hold up there, as you can see, like, for example, we did manage to hold above it for a few days. It just wasn't good enough, right? See, we were up here for a few days. It wasn't good enough, right? So if Bitcoin managed to holds above 116 to 118K, then new ATH within 30 days. If BTC does not hold above 116K to 118K, then no new ATH within 30 days. Very, very, very clear from our technical analysis that that's what we're looking at. Now, what we have to decide at this point, and this is where it gets fun, is we get to try and pick one. Which one do we agree with more? I'm going to run a poll in chat. Let's see if I can do that over here in Streamlabs. I think I can. Can I? Can I do that? Where'd my screen go? Nope. That's not what I meant to do. Sorry about that. Let's see if I can't run a poll. Ah, I think I can. Oh, that's cool. I just learned something new about how our streaming software works. Well, that's useful. Awesome. Okay, let's go ahead and do this is a slightly different version of our backend than I'm usually used to seeing. Hardy har har. Here it is. Start a poll. Nope, not start a Q&A. Start a poll. Hold above 116K and new ATH soon. Won't hold above. I want to see what you guys think. All right, let's run the poll. I want to hear it. I want to hear it. Here's my deal. Here's what I do. I'm just going to pull back the curtain and I'm going to show you how I make this so much fun. Because this is so much fun for me. I have a great time. I have so much fun. This is so much fun to me. I'm going to be honest. I really don't care. I really don't care. I really don't care which one happens. Because here's the deal. I can find trade setups on the bullish. I can find trade setups on the bearish. I can take investments above. I can take investments below. Literally all I do is I do my very best to come to work every single day and provide as much value as I possibly can into the marketplace. And you know what the marketplace does? It pays me compliments in the forms of money. Products get sold, right? And so I dollar cost average into the market because the labor is worth its wages and we make money and we invest it in the market. I dollar cost average whether we go up or whether we go down. So I don't really care. I build our Bitcoin position either way, just a little bit slower if we're higher. But of course, then our dollar value goes up. So in the way that I've set up my investment is that if the market goes down, I get to increase my Bitcoin position faster. If the dollar value of Bitcoin goes up, I increase the dollar value of our Bitcoin position faster. It's a win-win. All right. Let's do a little bit of let's go ahead and see what this poll says. I'm curious, and then we're going to jump into what I think. So, 58%, it's a split vote. There's 60 votes, and right now it says 58% of people are saying hold above 116K and new all-time high soon. It's a 60-40 split. Very interesting. Let's read a little bit of chat, and then we will keep it moving here. Really appreciate that. Hey guys, by the way, if you have not already, I really encourage you to work on dollar cost averaging in another way. You know, there are multiple ways you can dollar cost average into Bitcoin, but one of the most important is actually none other than managing to avoid taxes. You know, I do not like taxes. I do everything that I can to avoid taxes. I don't know about you, but I don't trust the federal government. Like, almost at all. I don't care who's in power. I don't care if Trump's in power. I don't care if Kamala's in power. I don't trust any of them. I really don't. I mean, once you get up to that stage, there's just a lot of corruption. I don't want to fund that, right? I don't want to fund the pedophile rings. I don't want to fund the Satanism and all this nonsense going on in the federal government. And so I do everything that I can to avoid taxes legally. I'm not going to go and commit tax fraud, obviously. But one thing that I do is I max out our IRA accounts every single year. And you can actually invest in Bitcoin and cryptocurrency in an IRA right now on spot, not even ETFs. It's okay. ETFs are fine, but you can invest in spot Bitcoin, spot cryptocurrency through your IRA, through your traditional IRA, through your rollover 401k, through your an SEP IRA, all kinds of different methods here at itrustcapital.com. This is my favorite place to invest in Bitcoin through tax advantage retirement accounts. So if you have not already, make sure to sign up for iTrust Capital by going to itrustcapital.com/CryptoJeb. A bunch of you have already done it, and the rest of you should too. Every single one of you. I'm not kidding. Some products, I'm like, this is for you, this is not for you. I have talked people out of buying certain of our courses because I'm like, I just don't see how that's going to benefit you. I genuinely mean it when I say every single one of you over the age of 18 that live in the United States of America should have an iTrust Capital account. And actually, I think you can get iTrust Capital anywhere. I take that back. You can get iTrust Capital anywhere because they have different structures for different markets. So make sure you sign up for iTrust Capital with the link in the description box down below. Take advantage of the tax advantages on offer. Basically, the way it works, in case you don't know, but most you probably do, traditional IRAs, you're able to deduct your income from your taxes, so you don't have to pay income tax on the money that you invest in that account for this year. Roth IRA, you don't have to pay taxes on the disbursements when you hit 59.5 and you want to start withdrawing, right? That's a really good deal. You can just avoid taxes and buy the best asset in the history of mankind, which is obviously Bitcoin. And so I highly encourage you to sign up for iTrust Capital with the link in the description box down below. So let's read a little bit of chat, and then we're going to continue moving on here. Okay. If it pulls back to 70K, that's more assurance of long-term support. If it pulls back to 70K, I am going to just, I will sell my kidney to buy Bitcoin. My goodness. Not literally, but I might think about it, you know. If you die, they're going to harvest it anyway and sell it. Why not? I make money on it. Oh, man, oh, man, oh, man. All right. Here's something that we need to talk about. Here's something we need to talk about. Here's something that we need to talk about. Dun, dun, dun. Gold. Yeesh. No bueno. There's a friend of ours at church who's a big gold bug, right? And I was talking to him yesterday about the gold market, and there's some things I learned about the gold market that are very interesting here. This is important because this is going to tie back into our analysis on Bitcoin. By the way, this is an example of something that you could theoretically argue is an Elliott wave 1, 2, 3, 4, 5 pattern. The only issue here is that the 2 wave comes back down here to the bottom of the 1 wave. So this is very arguable. You could theoretically call this a 1, 2, 3, 4, 5 pattern because we didn't breach the bottom of the 1 wave. But yeah, I'm going to leave it here for the sake of argument. But a couple of things I learned about this. The spread that is charged on gold is absolutely ridiculous. And a lot of people are realizing that right now in the gold market. A lot of people are realizing that if you are holding 100% pure gold and the price is at $4,400, you're not going to get $4,400 for an ounce. You're just not even going to come close. I mean, you're going to get like a 5 to 6, maybe 8% discount on that. So it's very, very, very difficult when you're using actual coinage, like bullion or even the currency, even the coins. It's very difficult to actually get your money out of gold. And this is one of the reasons why gold is going to fail. I was listening to our friend at church, and he's real big on gold, and he likes to hate on Bitcoin. I tell you what. And I just kind of sit there and I'm respectful. I'm just like, you know what? You take whatever you want. You're doing well for yourself. You're fine. But he talks about the gold market. I'm like, why in the hell would you want to work in that? Like, my gosh. He's telling me about how the dealers, there's like an 8% spread. And the gold dealers don't even make that because the market makers are the ones that are making it. Nobody's making any money in the gold market. I literally looked at him yesterday. We were going through line to get food. We were at our pastor's small group house, not a small group at his house. I looked at him. I said, so you're telling me that the gold dealers have a vested interest in the market not moving as fast? And he said, yes, they have a vested interest in the market not he's just got his dealer license. Like, this is his thing. This is what he does, right? He's retired military. Fantastic guy. He might even be watching. Shout out to you. I love you so much, dude. But I feel bad for the gold bugs out here. It's like an 8% spread. Are you kidding me? In crypto, we get upset about a 0.1% spread. What do you know what a spread is? A spread is the difference between the bid and the ask, right? The ask is up here. The bid's down here. This is what you're going to buy it for. This is what you're going to sell it for. And this is called the spread. And you basically have to, this is basically a tax that you pay every single time you trade cryptocurrency. When you're day trading, Bitcoin, for example, your spread might be 0.1%, might be 0.01%. The spread between the bid and the ask on gold is like 8% right now. That's absurd. Let me show you what 8% looks like on this chart. That's 8%. That's the spread. Wow. So When I tell you that the rotation out of gold into Bitcoin is going to be enormous, I cannot possibly explain to you in 1 hour why. But that's one of the reasons, is because if you invested in gold anytime in the last year and you're trying to sell it and you're having to go through that spread, you're getting screwed. Like, it's really rough. And so Bitcoin here, sorry, not Bitcoin, gold, understandably, is dropping below 4,000. Now, again, I think gold's going to be worth north of 10,000 by the end of the decade. Okay? I think that gold is a relatively solid investment. It's outperformed the S&P 500. I'm not trying to hate on gold as a long-term store of value, because it's not a bad long-term store of value. But what it is it is an asset that a lot of people have been trying to speculate on the way they speculated on Bitcoin, and it just doesn't work that way because it doesn't have the same it doesn't have the same liquidity. And so what you're seeing happen right now on gold is that you've seen this head and shoulders pattern form, and $4,000 even right before our eyes is breaking. Where are we going to go? Okay, well, we've got this head and shoulders price target down here to $3,600. Go to the daily chart, pull up your moving averages. Let's set one of those to 50, and you're going to see exactly where gold is most likely going to go. It is most likely going to go down to the 50 moving average. In fact, speaking of the a friend of ours is very much into gold. I even told him yesterday, I said $4,000. I told him I called the $4,000 bottom exactly. Like, I called it to go to $4,000. It hit $4,000.10. It hit there exactly, and now I'm calling for it to drop down to the 50 moving average. The 50 moving average down here is at $3,700. I told him, like, it's probably going to drop down to the 50. He knew exactly what I was talking about. He's like, yeah, that's probably what's going to happen. So even our friend who's very much into gold thinks that's what's going to happen, because we've seen gold drop down to this level over and over and over again, and even down here to the 100, for example. We might even drop down there, right? The 100 is right down here, right? And so if you turn off the 50 for just a second, these moving averages here, what you're going to see is that, generally speaking, the gold market drops down to these levels. It's not a bad thing. It doesn't mean the gold bull market's over. I don't think it is. But I do think at this point that you're going to see a drop down here somewhere between the 50 and the 100. I think that your price target, therefore, on gold is right here. This is the buy zone if you're trying to buy gold. And I'm thinking about buying some. Now, Jeb, you just said all this stuff. Yeah, but that really screws over people that are holding gold for, a week, right? I mean, if you get in and out of it in like 10 minutes, then that's one thing. But if you're holding it for like a week or two, you're really up a creek. So this is where I think that gold is going to go. We're going to go ahead and post this chart once again. Likely drop to 3,600 to 3,750 on gold within 1 month. Driven by overbought conditions and dovish policy stance from the Fed. This is our prediction on gold. I've decided I'm going to start posting my charts because I want to be known based on my accuracy, whether I'm right or I'm wrong. If I'm always wrong, say I'm always wrong. Just prove it. All right, let's go ahead and do that. And then we're going to take a 4-hour chart screenshot here. Let's do a 1-hour chart so we can actually see that drop. Yep. There we go. That's what I expect. Now, let's go ahead and come up here. I like to bookmark these because I like to go back and see if we were right or not. Got a lot of charts going on here. All right, so how does this play in? How does this play in? The way that this plays in, very simply, is this. With gold dropping, with gold showing weakness, and with the effective federal funds rate coming down very soon. Let's bring up the FedWatch tool. What we are anticipating in 2 days, what we are basically been told, is that in 2 days we're going to have an official announcement of a 25 basis point rate cut. We are also most likely going to have an announcement of the end of quantitative tightening. Now, I've talked about this in an exorbitant amount of detail in almost every single piece of content we've done as of late, but I'm going to make this really brief. We have an economy that is not based on hard assets. We have an economy that is based on debt. This is because our currency itself is debt. If you deposit $100 into the bank will take the $100, they will have it as an IOU to you, and then they will loan it out to someone else, and it's an IOU to them. So it's a double spend issue, more or less. It's the exact thing, it's one of the exact problems that Bitcoin was designed to solve. Because we have a system that's based on debt, understandably, the mechanics that govern that debt, since the debt market is the underlying bedrock of the entire economy, the tools that govern the way that debt operates have a fundamental impact on the entire market. Those tools are controlled by two groups. Number one, they're controlled by the Federal Reserve, which is who we're going to focus on today. And number two, they're controlled by banks. Focusing on the Federal Reserve, the Fed has two major tools that it uses to control this underlying foundation of debt. They have the balance sheet and they have the interest rate. Let's start with the interest rate because it's the simplest. The effective federal funds rate is the rate at which the Federal Reserve will loan money. When you borrow money from a bank, the bank loans you money and you pay them interest. Well, what happens if the bank runs out of money? Because that can happen. Ask anybody who's over 100 years old who lived through the Great Depression. Well, if the bank runs out of money, instead of just blowing up like they did in 1929, they go and they borrow money from the Fed. The Federal Reserve loans them money that they created out of thin air, and they loan it to the banks at a set interest rate. And that interest rate is right here. This is the effective federal funds rate. I hope you can kind of piece all this together in your mind. Federal Reserve is the bank of banks, the central bank. They loan money to all the other commercial and regional banks, and the commercial and regional banks loan money to you and me. When we borrow money from these banks, if they run out of money, they borrow money from the Fed. And so the Fed charges 4% to the commercial banks and the national banks and the regional banks, and they want to make money and they charge you 8%. So you're paying 8%, they're paying 4%, the Fed's paying nothing because they're the creator of money, if you will. The god of money is what they think they are. And so when the effective federal funds rate, which is the Fed's rate, decreases, then the commercial banks have a race to the bottom because it's somewhat competitive. They try and go into competition with their rates and they all lower rates. So when the effective federal funds rate goes down, all the other interest rates in the economy, theoretically, they don't always, but theoretically, they're supposed to go down. If all the other interest rates go down, then that means that less of the money is tied up going to interest. So think about it like this. I've talked about this as your milked ratio. How much money are you being milked for every single month out of the banking system? Take your income. Let's say you make $100,000 a year post-tax. Let's not worry about taxes for a second. Let's say you have a mortgage, you have a car payment, you have credit cards. $2,000 a month is going to interest. Okay. Now, let's just pretend that the interest rate on all that debt went down by 10%. Well, all of a sudden, instead of paying $2,000 on interest, you're paying $1,800 on interest. So you now have $200 that is free that you can then use to go and purchase things. You can invest it in the stock market. You can invest it in Bitcoin. You can buy groceries with it. You can buy new real estate with it. You can put it somewhere to increase values of everything. And so when you slow down the interest rate, you naturally lead to more consumption. You lead to more GDP growth because less money is going into the brakes, if you will, on the economy, which are the interest rates. They're the brakes of the economy. And they're going into the gas pedal of the economy, which is consumption, which is spending, which is investment, right? And so when the Federal Reserve drops interest rates, it allows the market to run hotter. It allows the market to run farther, which theoretically can raise inflation. I don't think that's as much of a causal relationship as people make it out to be, but theoretically it can raise inflation. In the same way, in the same way taking heroin might give you energy. I mean, it's just complete nonsense, but I mean, theoretically, there is somewhat of a comparison there. And then you have the other method by which the Federal Reserve manipulates the debt market, which is once again the denominator of our entire economy. I mean, this is why we want to go into a Bitcoin standard, a Bitcoin denomination. You remember fractions, right? You got 5/2, right? What's that? 2.5, right? With the entire economy in the numerator, the whole economy, everything. You look around, everything's in the numerator. What's in the denominator? The currency that it is denominated in. We want to go to a Bitcoin denomination because it does not operate on these, frankly, satanic banking principles. We operate with the Federal Reserve and the dollar as the denominator of our currency, and so this is why they have so much power, because they literally underpin the entire market. If you can grasp, even just a little bit, how powerful the Fed and the banking system is, you can grasp what Bitcoin can do. I got to grab my other microphone so I can do a mic drop, man. That's what I'm saying. If you can grasp how powerful the banking system is, how powerful the Federal Reserve is, and how powerful the Treasury are, those three, not just of our nation, but of every nation on planet Earth, and you start to understand how powerful Bitcoin can be. Because Bitcoin, unlike gold, actually has the capacity to be the denominator of the entire global economy. That's powerful. Okay, so the Fed also has control over something else called the balance sheet. When we see the Federal Reserve manipulating the balance sheet, they're manipulating something called the United States Central Bank balance sheet. USC BBS is a metric by which we look at how quickly they are either increasing or decreasing the amount of fake currency in the market. So there's two ways they do this. They either do something called they inject liquidity, is the politically correct term. They inject liquidity through the purchasing of treasuries or through the purchasing of mortgage-backed securities. A T-bill, a treasury, is a bank note, is a treasury note that you buy from the federal government. You give them $100, they promise to pay you back 4% per year every year for the duration of the loan. And so when you see, and then the other form is the mortgage-backed securities, right? They purchase these mortgage-backed securities to inflate the market. And so what you end up seeing happen is that depending on what the Fed is trying to do, if they're trying to slow down the economy, if they're trying to put the brakes on, then they roll off. They decrease this number, the QT. If they're trying to stimulate the economy, they increase it. So let's make this real simple. The Federal Reserve sees a problem. It's like a seesaw. You got a seesaw, right? Got the ground, got your little seesaw. Federal Reserve has something called a dual mandate. They're trying to keep inflation, we'll call that I, below 2%. Below 2%. And then they also have over here, labor market participation is the technical term, but we'll just call it U, unemployment. They're trying to keep unemployment low, right? So if it goes too high on the inflation side and labor market participation is good, then what they will end up doing is that they'll be more hawkish. They'll raise interest rates. They'll raise quantitative tightening, which is what we've been in. We've had quantitative tightening because inflation has been running hot. But now inflation is coming down, and we're in a state where inflation, they seem to think, is getting more so under control, and the unemployment is getting out of control. In other words, the Fed is trying to balance unemployment and inflation. The Fed is saying, we're okay with inflation where it is, but labor market participation is not great. Unemployment's not great. People are not getting jobs. And so when you see that the Fed is concerned about unemployment more so than they're concerned about inflation, then they adopt what is known as a dovish stance. When they're concerned about unemployment, they'll adopt a dovish stance. When they're concerned about inflation, they'll adopt a hawkish stance. Right? So the Fed has signaled very clearly they're not as concerned about inflation as they used to be. They're more concerned about unemployment. A lot of nuance we can go into here. We're not going to do that. Just keep it simple. That means they're adopting a dovish stance. The way that you tackle this from the Federal Reserve's policy book is you end quantitative tightening and you start quantitative easing. The first thing you do is you end the tightening, and sooner or later you begin the easing. Quantitative easing is most likely going to begin within the next year. Within the next 12 months, you will see quantitative easing. And you also see the effective federal funds rate go down. So what does this mean? This means a couple of things. Number one, and I've literally gone over the exact same thing like 20 times in the last month. This is my entire talking point. If you watch, I mean, give me a 1 in chat if you've heard me say this exact thing, same thing like 15 times. I'm just drilling it into your head because this is the entire basis by which I say that the bear market is canceled. We're not going to see a bear market in 2026. I am extremely confident of that. Could I be wrong? Yes. Could Jerome Powell step out on stage and just screw over all of what we've just set up on Friday or Wednesday? I think it was Wednesday, whenever he comes out. Wednesday? Yes, he could. Most likely, this is what's going to happen. The Fed is moving in the direction of a dovish stance. By the way, all 5 of the nominees to replace Jerome Powell in March or whenever he gets out, all of them are more dovish than he is. So this is something that's going to continue. One of them is like about the same as he is. The other 4 are are more dovish than he is. So the debt market has controlled by the quantitative easing and tightening, liquidity, and by the interest rate is going to essentially make the economy more liquid. There's going to be cheaper debt. There's going to be more debt. What do you do with that money? It gets invested. Well, I didn't invest it. I went and, I went and bought a motorcycle with it. Well, okay, so you did invest it. You just invested in Yamaha. Yamaha stock went up because they got revenue from you. So whenever you consume, I'm giving you a crash course in economics. Whenever you consume, you say, I'm going to go buy this muffin, right? I got this banana nut muffin right here that I was supposed to eat, but I just wanted to jump on stream, so I just skipped breakfast. When I buy this banana nut muffin, then the company... Otis Spunkemeyer, there we go. Otis Spunkemeyer makes money off of me because I invested in Otis Spunkemeyer. What a name. My gosh. That's a powerful name right there. Otis Spunkemeyer, naturally flavored banana nut muffin. These guys made, I don't know, 50 cents, right? Because I consumed, although I haven't consumed it yet, but with my dollars, I consumed this muffin, right? So yes, you are investing with this newfound capital. Okay? So this is why I say 2026 is going to be a bullish year. To be clear, the 4-year halving cycle is not as important as the debt cycle is. It's not. Not even close. It's not even close. Not even close. By the way, if you plot these two markets over against each other, then what you end up seeing happen is that the beginning of QT, which was right here, and the beginning of QT right here, perfectly correspond with the bottoms of the bear markets. I mean, it's really this obvious. Let's bring it up. It's really obvious that the 4-year halving cycle this entire time has been a misunderstanding. Draw a vertical line when QT ended, when QT began. QT begins right here. Look at exactly what happens when QT began. Bitcoin was sitting pretty. It was doing its thing, man. It was wiggling and jiving. It was having a grand old time. And then Mr. Powell, I think Powell was in office back then, right? Yeah, he was. Mr. Powell came in. We were sitting right here at the bottom of this channel, minding our own business. And then you saw QT come in. You see the quantitative tightening? You see this line start go down? Line go down, Bitcoin go down faster. This was not the bear market. This was a natural correction. This was the bear market. And this was caused by this, not by the halving. We've been blind this whole time. We've thought the whole time it had to do with the 4-year halving cycle. It didn't. It had to do with the 4-year debt cycle. Okay, let me prove it again. Okay, watch this. Watch this. This is the last bull market, right? Last bull market. No, not the last bull market. I'm sorry. This is the bull market in 2016-17. We got this beautiful, lovely uptrend. Look at this beautiful, lovely uptrend. Bitcoin's just absolutely exploding. On the log chart. Here comes quantitative tightening. Bitcoin blows off. Exactly at the moment that QT begins, Bitcoin pulls an under-over test of this uptrend, and then there's the bear market. This bear market was not driven by the 4-year halving cycle. This bear market was driven by the 4-year debt cycle. The beginning of QT perfectly called the beginning of both of the last bear markets. Okay, cool. What about the beginning of the bear markets? What about the beginning of the bull markets, rather? The beginning of the bull markets. Let's just look at this. Here's the beginning. Here's the beginning of QE. The beginning of QE is what kicked off the last bull market. You see? You see that? Beginning of QE is what kicked off the last bull market. What kicked off this bull market? See this little tick up here? There's a one-time liquidity injection that went into the Federal Reserve. This little bitty bit of QE kicked off this whole bull market. So if you'll notice, Bitcoin basically runs in a positive correlation. In other words, it moves in the same direction rather than in the opposite direction of quantitative easing and tightening. When QE is flat or increasing, Bitcoin goes up. When QT is happening, Bitcoin goes down. See how the market runs together? But then something peculiar happened right around here. What happened right around here? This is when we got the announcement right in here of two things. Number one, the SEC dropped the XRP case. Number two, BlackRock filed for an ETF. And Bitcoin managed to rally 250% despite the quantitative tightening environment. When this quantitative tightening ends, because this entire bull market was driven not by the debt cycle, which it normally is, but it was driven by inflows on the institutional level, when that ends, Bitcoin is going to go to $500,000 to $1 million per coin. And it's going to happen faster than you think it is. And it's not going to happen on a 4-year halving cycle. It's going to happen at the whim of whoever is at the helm of the Fed. The Federal Reserve, as much as we try and get away from them, is still in charge of everything. Bitcoin, for the foreseeable future, I'm going to estimate for the next 5 to 10 years, is almost completely at the mercy of the Federal Reserve. And if the Fed enacts QT, we're going to see slower growth in Bitcoin. If the Fed, by some just miracle, enacts QE, and I only say miracle because the dollar's already dead, might as well make money shorting it, right? Bitcoin is going to absolutely rip. And so a gigantic rally is around the corner. I hope that you can understand what I'm getting at. I really hope you understand that. If Jerome Powell, here's another thing. Here's another invalidation for our 94 to 100K target. If Jerome Powell comes out and says that QE is about to start, if he says that we're going to need QE on Wednesday, I am going to be glued to my screen. I will figure out a way to live stream this FOMC meeting. I will make it happen somehow. I'm going to try anyway. If he so much as says the words quantitative easing, Bitcoin is going to shoot up to an all-time high within a few weeks. If we see quantitative easing get signaled at all, I'm not necessarily expecting him to do that, but he surprised me last time when he announced like 4 more rate cuts. That surprised me. I was like, wow, okay. So here we are. He realized Trump was right. We need to cut rates. If he says anything about quantitative easing, Bitcoin is going to go ballistic. And so if you have a Bitcoin target, I would really encourage you not to sit around and wait for Bitcoin to go down to 94K. There's a possibility 94K comes, but I am at this point the least confident in that I have been in a very long time. So here's the two scenarios of what happens over the next few days to the next month to the next year. If Jerome Powell says, okay, we're ending quantitative tightening, but he doesn't say that we're going to have quantitative easing, and we see the rate cut. Just a regular old meeting, the exact way we expect it. We might see a drop back down to here, where we back test this uptrending level of support. If we hold it, we rally back to all-time high. If we break below it, we crash down to 94K. If Jerome Powell so much as says the words QE, like even if he's like saying, you know, a word that just has those 2 letters in it, if he just so much as mentions quantitative easing, 116 will likely break. Will likely break above 0.618 here at 117, and Bitcoin will go back to all-time high. I am on the very verge of saying 94 is a foregone just a deleted target, and that we're not going to go down there. It really all hinges on what Jerome Powell says on Wednesday. We don't know what he's going to say. It depends on what he's going to say. Depending on what he says, I will come out and I will make a concrete prediction, and I will probably even remove the if-then statements, and I'll just say this is what I think is going to happen no matter what, based on what he says. So stay tuned for that. Stay tuned for that live stream. Everything that Jay Powell says on Wednesday is going to be ridiculously important. Absolutely ridiculously important. We might even try and trade it. Might even try and trade it. Really appreciate all of you guys being here. Heroin doesn't give you energy, but I have no idea. I've never gone anywhere near that nonsense. I have no freaking clue. The demand will always be there. The key factor is how much demand, further proving that the 4-year cycle isn't the catalyst. I've been one of the people screaming from the rooftops, putting my reputation on the line, saying the 4-year halving cycle is dead. And the reason the 4-year halving cycle is dead is because it was never based on the halving cycle. I'm going to be honest, the whole time that I've been talking about the 4-year halving cycle for the last several years, I've been thinking to myself, like, What the hell's the point of this? What does it even matter? Who cares? The inflation rate of Bitcoin is almost already basically nothing anyway. What does it matter? Why should it have any? Why should it have any bearing whatsoever on the price of Bitcoin? And now I realize, because it never was that. It was an illusion. It always had to do with the debt. It always had to do with what was going on at the Fed. That's why. That's why. Did Jeb say he cancels his 94 to 100K target? Not yet, but I'm real dang close. I'm really, really close. CZ being pardoned is a really big deal. Yes, it is. It is. It is a big deal. Donald Trump and the entire current administration are doing everything that they can to manipulate the price of the markets higher. I mean, they're just trying to run the engine as hot as they can and to, quote unquote outgrow the growth. You know, here's something you should think about. Have you ever noticed that Donald Trump doesn't pitch a hissy fit anymore about China devaluing the currency? Have you ever noticed that? You remember that? I mean, most of you guys are older than me. You remember in the 2016 election. I watched that election very closely. I was in high school. I was like the only guy. Like, I watched that very closely. And one thing he was always ticked off about with China is them devaluing their currency. Have you noticed that he doesn't talk about that anymore? That was that and the border wall were like his two main talking points was screw China because they're not playing fair and they're devaluing their currency. Have you noticed that the wall's still a big thing, but he doesn't talk about China devaluing their currency anymore? Have you also noticed that in this administration, he doesn't mind inflation running hot because he and his Treasury Secretary, Scott Bessent, think that they can outgrow the inflation? He realized that what the Chinese are doing by debasing their own currency for the sake of stimulating growth can work in the short term. And he's adopted that strategy. Donald Trump genuinely believes that he can moonshot the price of Bitcoin, moonshot the stock market, moonshot everything faster than the impacts of inflation will hurt the economy because of American might. Now, I'm not necessarily inclined to think that's a good strategy because one day Donald Trump is not going to be with us anymore, and I'm probably still going to be here and be left with the consequences and say, thanks, dude, for destroying the value of our currency. Now, that said, I see this coming. And so what do? I do everything in my power to short the United States dollar. That's like my investment strategy is almost all to do with shorting the dollar. In any way I can possibly conceive of that's moral and ethical, I short the dollar. I short it. I short the dollar however I can because it's dying. And now that we have the right under MAGA inflating the currency, we now understand that we might as well have a uniparty system where both parties are fine with runaway debt. It used to be that you had fiscal conservatives that didn't want to see inflation run this hot. They didn't want to see M2 grow this much. They didn't want to see the just over dovishness at the Fed. Those voices are, for the most part, gone. Say what you will about that. I'm not trying to make a political statement here. I'm just saying that that's the way it is. We live in a market now where you're going to see debasement of the currency. You're seeing hyperinflation as we speak. This is not something that we are thinking is going to happen in the future. It is taking place right now. And if you do not understand all this stuff that I'm talking about, I'm not saying you have to understand it on my level. I am an expert at this. I've been doing this analysis every single day for almost a decade now. There's over 5,000 pieces of content on this channel. Okay, I'm not saying you have to understand it at my level. And I'm not trying to put myself on some pedestal because I'm learning every single day too. I'm just saying you don't have to understand it on the super deep level. But if you don't understand this on a basic level, which is that the Federal Reserve has a vested interest and the federal government has a vested interest in causing your dollar to lose money, and they're doing it on purpose, and they meant to do it, and it was always a part of the plan. If you don't understand that, you might as well just bend over because they're trying to screw you. Jeff, that's very graphic. So is losing your entire net worth and having to go sit in a bread line all day. Because that's what's coming. Your job as a man, 93% of our audience are males. The 7% of you who are females, just sit back and pray that you find a man that understands this too. 93% of my audience are males. Your job, as called by God, is to provide and protect for your household. If you don't understand that the government is trying to steal your dollars right out from under your mattress without ever touching them, you are not doing your job. You've got to figure out how to protect your wife and your kids and the people around you from this. Again, the entire economy is in the numerator. The dollar is in the denominator. If you want to succeed, you have to change your denominator. You have to live on a gold standard, or at least you have to live on a Bitcoin standard, or at least on a gold standard. You need hard assets in the denominator. If you're a saver, I know some people, they've got $3 million in cash. They've got nothing in real estate. They've got nothing in Bitcoin. They've got nothing in gold. They've got nothing in the stock market. You are getting screwed. How can you have such a high income and so much potential? You provide so much value to the marketplace, but you do not understand that the dollar is being destroyed on purpose to tax you to make them rich and powerful. You need a wake-up call. Jib, quit yelling at me. No. If you understand this, good. I'm not talking to you. For those of you who have listened to everything I've said and you've said, that's cool. I'm going to go back to my 9 to 5. I'm going to go play video games. I'm going to go hit the golf club. I'm going to go out to dinner tonight. I'm going to do nothing about this. Your foolishness will come back to bite you. You must do something about this. Because if you don't, then you're the exact kind of person that they're trying to screw. They're coming for your dollar. They're coming for your wealth. They're coming for your life. Let me put it like this. The amount of it's been calculated, the amount of quantitative easing and the amount of debasement that took place on the United States dollar over the course of the 2020 and 2021 COVID-19 pandemic, all the inflation that took place in the first 2 to 3 years after COVID-19, the amount of purchasing power that stole from the American people is equivalent to 2 million lifetimes of the median income in America. 2 million lifetimes of work were stolen from the American people and given to the rich and powerful. The rich get rich, the poor get poor. They want you to think that it's the rich people. It's not the rich people. It's the people that control the rich people's money. You must understand. Please, I am begging you. You must understand. It doesn't benefit me anything if you understand this, but it's absolutely essential for you. You have to understand. They're doing everything that they can to destroy your life. Do you understand that there are 500 million guns in America? They know that they have no shot of overthrowing this country militarily. So they have to destroy it culturally and they have to destroy it economically. Have you noticed that? They know dang well if they walk into my house and try and take my guns, it's not going to end well. But they can take the value of my dollar without my permission. And they're doing it to you also. The founding fathers would be sick to their stomach and would have started another revolution over what the Federal Reserve is doing to your currency, over what the banking system is doing to your currency. And the way that you rebel is not with, thank God, it's not militarily because people die like that. The way that you rebel against this is you say, I have had it. I'm done with it. I will take sovereignty and dominion over those things which God has given me, and I will not watch 6.2% of its value go to the Federal Reserve and go to the banking system every single year and sit idly by as I watch my wife and kids get more and more hungry every single year. I'm going to be a man and do something about it. And you know what you do? You buy hard assets. That's what you do. Let's read some chat. First degree theft. That's a good way to put it. 16 million people working 24/7 for 40 years. Take a swig of the coffee and scream louder, buddy. Oh, that's not the coffee talking. I've only had like the top little tiny bit of this. I barely had anything today. I wake up like this. It pisses me off. I'm so incredibly ticked off. Why are you yelling at me? If you don't understand why I'm yelling at you, then you're the person I'm yelling at. I'm not mad at you. I need you to understand this. I mean, sometimes, like, look, I never yell at my children because they're children. They're too. I might yell on strength. I never yell at my children, but I grab my son sometimes. I very gently, gentleness is the fruit of the spirit. I'm like, Malachi, please look at me. Malachi, look at me, dude. He's like over here. You know, he's doing this number. He's like, well, what's that? All of a sudden, the ceiling's really interesting, right? I'm like, dude, look at me. Like, listen to me. You have to understand this, or this is going to happen. Last night, I'm telling my son, I'm saying, son, I want you to get dressed for bed. And if you don't get dressed for bed, without me, if I have to remind you, you don't get TV. You're not allowed to watch TV for half an hour before you go to bed. Okay. So I walk in the house. He starts to get dressed, but he doesn't finish. He just completely forgets about it. He goes and does all of his own stuff. And I look at him, I say, are you dressed? And he goes, oh, crap, I forgot about that. And he looks at me and he says, so no TV? I said, nope, no TV. He said, why? Why? And so I say to him, look, there are times in life where you got to get things done now. And if you don't, there are consequences. If I don't pay the mortgage, we don't live here anymore. If I don't file taxes, they arrest me. If I don't feed you, I don't get to keep you. Kids are great, but I got to feed them if I want to keep them, right? Sometimes you have to do things and you have to do them right now. I say, look, you got to understand this. And this is exactly how I'm taught. I never scream at my kids. Ever. Never yell. They're gentle. Never. And I wouldn't talk to you like this in a one-on-one, by the way. The only reason I'm talking like this is because to an audience, and none of you are going to feel like I'm talking directly to you, right? So you got to understand this. If you don't understand this basic truth that we have to get things done in a timely manner, then when you get older, you might have one of those things happen to you. You don't feed your children. The government comes and rightfully, in this case, takes them from you. You don't pay your mortgage. The bank comes and, in this case, rightfully evicts you. You don't pay your car payment, and the bank comes and rightfully, in this case, takes the car from you. You understand what I mean? Yes, Daddy, I completely understand. Okay, and I say, why then should I let you watch TV tonight? He says, because I understand what you just said. I get it. I understand. He's saying, I'm learning, I'm starting to understand what you're saying. I said, okay, cool, you can watch TV because you understood. I need you to understand something. I need you to understand something. Okay, back to talking to adults here. I need you to understand something, dear viewer. If you do not do something about this, you will get screwed. If you do not understand that the dollar is being debased on purpose by Donald Trump, by the Federal Reserve, by the Republicans and the Democrats, by both of them, if you don't understand that, again, remember, Donald Trump used to talk a big game about how China is debasing the currency, you know. Used to talk big game about that. Doesn't mention it now. You know why? Because he did the same thing. He realized it works. So he shut up about it because he didn't want to be a hypocrite. They're both doing it. Here's your answer. Here's your answer. Here's your answer. Here's your answer. You can bend over and get screwed by the government, who's doing everything that they possibly can to steal from you. Because that's what inflation is. It is theft by the banks and by the government. You can do everything you can you can either just not do anything, you can bend over and take it, or you can do something about it. This is why I have so much passion about what I do. This is why I wake up and I'm thinking about this, and I go to bed and I'm like, I'm supposed to be resting. You know, in one way or another, I'm doing something work-related from the moment I wake up until like 11 o'clock at night, whether that's working to take care of my family or working to take care of this company. That's my entire life, and I love every minute of it. But there's a reason why when after a 13-hour, 14-hour day, I get in bed and I finally have like half an hour to myself, I want to pick up my laptop and look at my phone and look at X. No, it's not because I'm addicted to it, although I probably am, to be honest with you. The reason is because this matters. I have one of the most important jobs in the universe right now, which is to show you that there is a war against your household, dear man, whose job is to protect and provide. And you need to do something about it. It is your job. The cavalry is not coming. The government will not bail you out. They're the ones that are doing it. Your wife going into the labor force is not going to solve the problem because they're going to inflate away her income also. You dear man with a wife and a child, you need to wake up and be a man and take care of your family. And if you don't buy any more of our products and I make nothing off of you financially, but you walk away and you're better for that family, then I won. I don't care if you don't buy any of my products. Go be a good husband. Go be a good father. Jeb, I'm not married. Well, God willing, you will be one day. Get working. I remember when I started going to the gym, I was like, man, I had no motivation. I'd be here under the bench press. I'd be sitting for my future wife. I had no idea what her name was. I never met her. Say for my wife and my kids. I'd never met them before because I hadn't met my wife yet. I was a single guy. I'm sitting here. I can't get motivated. Man, what am I doing? For my wife and kids. That's in here. God put that in you. You got to tap into that. For your family, for your church, for your dad, for your sister, for your brother, for your pastor, for anybody, whoever it is. Who is it? You got to figure out who is it that you're fighting for. And then you got to figure out what the fight is. And then you need to dedicate yourself to that. I rest my case. I rest my case. So, once again, if Bitcoin manages to break and hold above this zone right here, Bitcoin manages to break and hold above this zone, we're going higher. If Bitcoin doesn't, we're temporarily going lower, followed by a little later, we'll go higher. So, if in both cases, Bitcoin goes higher, why not just start buying now? You know, so for a while there, I was dollar cost averaging every single day. And then I said to myself, you know what? I'm just going to dump all of our money into it. I had $180,000 sitting in cash at the beginning of this year on top of all of our investments. And I said to myself, why the hell am I sitting on $180,000 of cash? This is really stupid. I'm longing dollars. And so you know what I did? I just dumped it all into Bitcoin below 100K. Just dumped all of it into Bitcoin. Dropped our savings down to like $2,000. Jeb, that's irresponsible. Yeah, so is holding dollars. So we built up our savings again. You know, we've got some savings. But I literally just took about $200,000, put all of it into Bitcoin. I didn't buy a single altcoin with any of it. I just put it all into Bitcoin. In between about here and about here. We put $180,000 into Bitcoin right here on top of everything that we've been acquiring for years and years and years. And then we've also acquired a bunch more ever since then. But we just dumped all of our savings into Bitcoin here. If Bitcoin drops back down to 94, a lot of that will be a break even. But that's okay. I'm fine with that because I know where we're going. And I said to myself, my golly, it looks like we're about to break 100K. We might leave behind forever. I need to get some. And so I raced to deploy it as fast as I can. Now, when you're trying to move tens and tens and tens of thousands of dollars, it's actually kind of hard to move that much money. So I was actually having to like race to get it all invested before we hit 100K. So I like ran. I mean, I went fast. In fact, this line is wrong. We did our last, like somewhere right around here. So I remember when it broke 100K right here, my wife and my son and I and my daughter were on our way. Actually, it was just my son because we were doing just a kind of special day for him, right? We took him to the beach in St. Augustine on this day. It was, what day was that? I guess that would have been May the 8th. And I said, sweetie, Bitcoin's breaking above 100K and it might never go below there again. We pulled over at this little, broke down gas station. And on the side of the road, I just dumped the rest of that $180,000 into Bitcoin right here at like 102. So we started buying down here because if you'll remember, Queen will remember, she remembers all our calls, a lot of you guys do. We said that Bitcoin was going to drop down to $73,800. Bitcoin dropped down to 75. We got the bottom perfectly correct. Just almost perfect within $2,000. This time we got the bottom within $3,000. We said 94 to 100. We dropped down to 103. 103 may end up being the bottom, and we may have been wrong on that. We may have called that a little bit too low, but oh well. We were buying down there. I dumped a ton of money into Bitcoin right here. And that's what you can do. And so I just started kind of playing around with lump sum investments. We were daily DCAing. I'm back in the game where I'm like, you know what? I'm just going to daily DCA. I'm going to turn it into a system again. Instead of just dumping lump sums here and lump sums there, I'm just going to turn it into a system again. We just rally. Bitcoin goes up forever because dollar goes down forever. So here's the deal. If you guys want to get into the first cohort Discord server where I am kind of, where all of us are working together as a team to learn how to succeed in the cryptocurrency space. This is a fantastic Discord server. We've got a lot of stuff going on over here, and we've got a lot of things that are also coming over here. We've got a lot of work that's going to be going into the Discord server over the next few months. I highly encourage you to sign up for 2bit, which is our preferred trading platform. And the reason that I recommend signing up for 2-Bit is because it is where I do all of my trading. And I think it's a great exchange. They've got deep order books. They've got a lot of liquidity, great uptime. It's a great trading platform, great interface. And yeah, so if you sign up for 2-Bit and deposit $100, then you're going to be able to get access to the first cohort trading group for free for 1 year. All you got to do is send an email to malachipats@cryptojeb.com with the link in the description box down below, and then you will actually get access to the first cohort Discord server. Because you signed up for 2-Bit, deposit $100, use it as your trading platform, and we would love to teach you how to trade. We're working on a lot of trading education. We're working on a lot of, and I mean, I showed you this morning the trading setup we showed you on Friday, and it hit the take profit. So we're working on trading, investment, financial management, and overall just beating the dollar, because the dollar's trying to kill you. I mean, look in your wallet, look at the dollar, look at where it talks about the Federal Reserve on there, and just say this entity is trying to destroy my family. This entity is destroying my family. I'm going to do everything I can to rebel against that. Also, guys, make sure to check out Stampseed if you haven't already. Big fan of Stampseed. Really, really big fan of Stampseed. This company is allowing you to stamp your seed phrases onto titanium. You have this little, like, 3-inch by 3-inch sheet of titanium. It's got 24, I don't know if you can see that, but 24 different spots for your seed phrase. You take this hammer, and then you take the dies, which I have down here. Take the dies. They come in this beautiful little kit right here. See? Take the dies, and you got each letter, right? So this letter, for example, is I. Take I. Actually, you know what? Let's get E. I'll stamp my name on this, because these are a couple of dummies. Obviously, these don't have my actual seed phrase on it, but I stamped a J on here. Let's find the E. Show you how this works. I got it upside down. Yep, there we go. A, B, C, D, E, F, G. There we go. And there's the E. Take the E. All we got to do is put the E right here. Can you see this? There we go. Take the E. Put the E right here. Take your hammer. Smack it. There you go. We put a J on there last week. Now we got an E on there. We're going to write out Jeb on Crypto Jeb, right? So that's that. The reason that you would do this, you're like, Jeb, what's the point of that? Like, I mean, that's cool and all. You got a cool hammer, but, why do that? The reason that you would want to do that is because titanium can withstand up to 3,500 degrees Fahrenheit, which is hotter than any house fire, which means that if your house burns down, you keep your Bitcoin. That's a pretty good sales pitch. If you guys have Bitcoin and you're not preserving it, you're not taking care to keep it safe, that's what we call foolish. Don't be foolish. Fools go broke. Be wise. Wise people do things to preserve their wealth, such as buying Stampseed's products. Go to the link in the description box down below. This was fun. It was fun. Just bought more Bitcoin. Could not handle that stress. There we go. That's what I'm looking for. Hey, I started running again. We've been trying to get in a good routine ever since the baby was born. We still got a few weeks to try and get things settled in, but I've been able to do a lot more. I started running again. I thought I was going to pass out last week when I started. I was like, oh my gosh, I'm just pushing myself way too hard. I almost got a sub 10-minute mile today. That's not impressive for most of you guys, but for me over here with the, I was pretty happy with myself. So I was pretty excited about that. I felt really good. I got back literally 10 minutes before the start of the stream. Went to a quick shower, jumped on stream. It's been good. It's been good. I love you guys. I really appreciate all of you being here. If you haven't already, make sure to hit that like button. Subscribe to the channel. Stay tuned for more content. Big shout out to the super chat. There was a super chat earlier in the stream. I donated $2. I can't see it anymore. I think that might have been Matt PT. I don't know who did that, but shout out to whoever it was that did the super chat for $2. I really appreciate that. Guys, stay tuned. We got a lot more content coming. I love you. I'm so appreciative that you're here. And before I go, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.